Well, the second largest maker of luxury vehicles, Daimler AG, just showing you the stock, reporting an unexpected loss this morning. Shares are tumbling. We're partnering now with the FT to bring you Lex on Bloomberg. You get a sneak peek at the Financial Times' flagship column a day early. Neil Buckley joining us now from London. Neil, always glad to have you on with us. In November, the company said the worst was over. So how did this happen?
Well, I think the worst still is over. I don't think anything has got significantly worse since November, but it turns out that their fourth quarter trading was not as good as the market had expected. They've made a big loss in the fourth quarter, which has pushed the full-year loss to be much bigger than people had forecast. But the real surprise this morning, and I think what's unnerving people in the markets, is that because of this big loss, Daimler is saying there's going to be no 2009 dividend. Now, that's despite the fact that they generated really quite a lot of cash. They ended up last year with more cash than they started out with. And so the market is looking at this and wondering if Daimler is seeing something ahead that's concerning that the market hasn't seen before. So it's raising a lot of questions about the outlook for this year.
Well, you mentioned the outlook, Neil. I mean, what exactly can investors hope for?
Well, things ought to get a bit better. Daimler themselves are saying that they see global car sales increasing by 3 or 4% this year. Things should improve, for example, in the trucks business, which is very important for Daimler, unlike some of the other car makers. And, of course, the trucks business worldwide was hit very badly last year. Daimler actually has stuck its neck out by giving some detailed numbers this year for what it expects on operating profits. Some of the other European manufacturers have declined to give that kind of detail. The problem is that the number they've given for operating profit, 2.3 billion euros as a minimum this year, is less than the market had been expecting, about 20% less than the 2.8, 2.9 billion figure that the market had been looking for this year. And so that's another factor which is pushing the shares down this morning. Analysts are revising down their own profits forecasts, and that's hitting the shares very hard.
Neil, we thank you so much. Neil Buckley joining us there from London from the FT.